DeFi Solutions. In this video, we're going to talk about why I think the peak of the crypto bull cycle is here and what you should be doing to ladder out, secure profits, and make sure that you're prepared for the next bear cycle, where smart money accumulates cryptocurrency in preparation for the next bull cycle, right? Which we think will probably be somewhere in 2029, 2030. All right, so let's go ahead and dive into it. So first thing you want to understand is the bull cycle itself. How does the market structure actually work? Okay. So if we kind of think back to 2022 bear cycle, that was the accumulation time. That's when smart money was buying cryptocurrency, right? 2022, 2023, smart money was accumulating and the trend started to emerge in 2023, right? And as we went into 2023 fall and 2024, momentum started to build even more, right? Now, we saw the first sentiment extreme in the fall of 2023. And as we entered into 2024, when we had the Solana meme coin craze, right? We had the dog with hats, we had the bunks of the world, the bunk bot, and all of these different things. We had this frenzy of meme coin buying that really got popular on Solana, but expanded across various blockchains from Tron to Base to Ethereum as well, right? And even more. Now, as we went into 2024 summertime, we started to see some consolidation. And then as we went into fall of 2024, we started to see some renewed optimism with the US presidential election and some other things that led to Bitcoin going to new all-time highs at that time. Then as we went into 2025 quarter one, things started to cool down just a bit, right? And we kind of went into sort of a bear trap, right? In the beginning parts of April, people thought that the bull run wasn't going to happen anymore, even though it was already happening before their eyes. And some people started to sell. But then we had, things changed in April and we started to see the market start to surge again. And as we went into the summertime of 2025, which is where we are now, we've seen renewed optimism. And now we are approaching that FOMO and euphoric era of the market cycle, right? So FOMO is when everyone has the fear of missing out. We have seen massive institution adoption of cryptocurrency. Now we're starting to see retail investors come back. We see mom and pops and cousins and brothers and sisters who know nothing about cryptocurrency. They're suddenly cryptocurrency experts. Everyone is a cryptocurrency trader now. Everyone is riding the bull run wave, and everyone's about to get rich off of some altcoin just by putting $100 on it, right? So that is the fear of missing out / euphoria era that we are in right now in the bull cycle. So what should you be doing and why? Okay. So this next diagram is kind of going to talk about what we should be doing and why. So we are somewhere in this area here between greed and delusion. Things are going up. What you should be doing is laddering out. Okay. So there's something called dollar cost averaging. I call it DCA, right? In the crypto world, we call it DCA. In the investing world, we call it DCA. You want to DCA out of the market now, meaning what you should be doing is taking portions of your portfolio and selling it at key psychological areas. Okay. So what I mean by that is, let's say, for example, Bitcoin reaches $125,000. At that point in time, you might want to take 10 to 15% of your portfolio and sell it. Okay. Now, if your portfolio is mainly in Bitcoin, you definitely want to sell that. But let's say if you're holding altcoins and you're like, hey, well, Bitcoin surged, but my altcoins have not. In that case, you want to make sure that you're watching for altcoin season, which is typically going to be signaled by the surges in Ethereum's price. Now, we've just recently seen Ethereum rise. Today is August the 14th. We just seen Ethereum go to about $4,500. Actually, it went to $4,700. So that tells me that alt season is about to begin. So if you haven't seen huge surges on your altcoins, expect it to happen within the next 2 to 3 months. And as things are surging, do not try to time the top. Just go ahead and start selling as you reach key psychological areas. And those key psychological areas will be Nice round whole numbers, right? So if you hold a altcoin that's trading at 80 cents, if it reaches $1, you might want to sell a nice chunk of your portfolio and secure those profits. Because remember, none of this matters. If your portfolio is growing right now, it does not matter if you do not lock in profits. All right. That's the whole purpose. That is why we trade, to lock in profits. So you want to make sure that you lock in profits before we get to this new paradigm era, right? When we get to this new paradigm area, that's when people are going to be, a lot of people are going to buy the top here. These are the ones that you want to use as exit liquidity, and you want to be selling here, right? You want to be selling on this upward tick here, because if you do not sell before we get to this area, then things are going to start to turn around. We're going to start to see the market start to change trajectory and go downwards. And by this point in time, you want to have all of your volatile assets now converted or sold into stable coin or US dollar or whatever the respective non-volatile currency is for your particular nation or country. Okay. And what you should do next is watch the market trend down, and you want to DCA in and buy at key psychological levels on the way down, right? Because if you're buying the dip here, and let's say even at this point here, you buy a huge portion of the dip by using, let's say you had $100,000, you do $10,000 here, buy the dip, 20,000 here, 30,000 here, and then at the bottom down here somewhere, you want to put that last $50,000 in, right? Because this will be that accumulation zone as we go into 2026, 2027, and we are in a bear market. Now, keep in mind the next Bitcoin halving is going to be April of 2028, right? So you want to make sure that you have accumulated during 2026, 2027, and you want to make sure that you are preparing for the next halving cycle, because by the time we reach the next halving cycle, we will start the upwards trajectory towards another bull cycle, which will more than likely peak somewhere around 2029, early 2030. All right. Now, my Bitcoin price predictions for this cycle. I think the peak price of this cycle is going to be somewhere between this 125, 150 range. We've already passed 120. So that's why I say 125 to 150 range. Some people predict $200,000 Bitcoin. Some people predict $250,000 Bitcoin right now. Personally, I don't think that we're going to go that high this cycle. It could happen. However, I'm going to focus on selling majority of my portfolio between this area here. I might hold a little bit of the bag if Bitcoin seems to like it's going to go past 150. I might hold a little bit of the bag just to see what happens. But that's my prediction for this current bull cycle. Now, as we go into the next bear cycle, which typically lasts around 18 to 24 months, I think Bitcoin could go as low as 35,000, right? Somewhere 35, 50,000. Could go lower, might not go as low, but this is the range, right? And this is where I'm going to be accumulating. Now, what to think about for the next bull cycle peak. So if I'm accumulating here and buying Bitcoin at $35,000, $50,000, I'm thinking the next bull cycle peak, 2029, 2030, Bitcoin is going to go somewhere between 200,000, 300,000, maybe even possibly higher. Could see 500,000. But if I accumulate at this level, let's say I buy at $50,000 and I sell at 200,000, that is a 4x on my money, right? So in the next 4 to 5 years, you can 4x your money if you time the market correctly. Okay. Now, why the 2026 will likely begin a bear cycle? Because people are going to be in denial. People are going to be panic selling, and people are going to be in despair. All right. So you want to make sure that you are stable, that you're out of the market, either out of the market or you just are in stable coins or US dollar at that point in time. Prepare for 2026, 2027. The bear phase is going to last maybe a few years, 18 to 24 months. Be ready to buy the dips. All right. Think of key psychological levels as you're laddering out And as you're laddering back in during the bear cycle, at those key cycle levels, make sure that you sell portions of your portfolio, right? 10 to 25%. You can use Fibonacci to help you to understand these key psychological areas. You can use TradingView, which is a great trading tool that I use all the time. Make sure that you reallocate your profits into stablecoin or cash or low risk yields. All right. And just keep in mind that right now, this isn't about fear. It isn't about getting too euphoric. It's about just staying in the middle. It's about staying disciplined, right? So bull markets do create life-changing opportunities. However, these life-changing opportunities only come when you're accumulating during the bear cycle. So keep in mind that that is very important. That is how you prepare yourself for financial freedom, right? And this is DeFi Guy giving you the ins and out of the crypto market cycles when it comes to bull and bear cycles. This is Frankly DeFi Solutions. I hope you guys have a great day. Safe trading. Thanks for tuning in.